Yo, what's up you guys? Welcome back to another exciting video. Today's video, yes, you guessed it, we are going to talk about consistency rules, the 50% rule. I'm also going to talk about HFT systems. Someone asked me what is the difference between an HFT and an EA. We're going to cover all of that, and I'm also going to give you some tips and tricks on how to avoid getting penalized for the consistency rules there as well. Now, if you're new here, a sub would be appreciated, as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button, and don't forget I am giving away the HFT system to 2 lucky winners. Make sure you sub to the channel and you follow the Wealth Creatives on Instagram there as well. Now let's start with the normal thing first, right? So I'm sitting here now recording this in load shedding. So you got 4 hours of load shedding. Not sure when all of this is going to end, right? But in any case, so for those of you that wondered what is an HFT system, right? It is basically a high frequency trading system, right? It basically means what it say it is. It's a high frequency trading system. It is a system that takes multiple times at the speed of light. Now, the reason why this works with certain prop firms and that allows the use of HFT and not everyone else, because the system takes trades so fast, right? And the system, or the liquidity provider that is used with the system, they normally, so there's a big exchange, right? A big exchange where they get the quotes from, the prices from, because not where your broker gets the price from, because your broker make up their own prices. I'm talking about the actual exchange. The A book traders will know this because you deal directly with the exchange. If you're a B book broker, thank you. Good luck with your spreads. I'm one of them. So basically what that means is that the price, the actual price of where the market is at that point, that is basically what the price that they get. Sorry, I need to be subscribed for the expensive. So I'm going to try and make an example so that you can understand, right? So let's assume for the next minute the price went from there all the way till there, right? Now, and I'm not going to say there, right? Just there, because there's like 30 milliseconds, 30,000 milliseconds, something like that, that the price is received, right? So let's assume before this price started to move down, right? You get a broker that's waiting for the price here, right? The price was at number 1 there. Now, when the price changes, right, the time that it takes for the price to get to the broker to say, hey, the price is not supposed to be 1, it's supposed to be number 2, let's say it takes about 1 second. Now, in HFT system, with a provided with a good API or a good liquidity provider, on the other side, they get the price when the exchange say the price is supposed to go from 1 to 2, they get that price immediately. So what they do is they place that sell position right after the exchange say we're supposed to go for a sell, and I don't think this is supposed to go for a sell. I know it looks like it's going for a sell, but it's going to go up. So basically they then where was I'm doing breakdowns here while I'm talking. So basically you get the HFT system. So I'm gonna, even if this, I just want to make sure you guys understand, right? So that you can understand, because a lot of people are trying to scam people out there. I've seen it. Like, I'm just observing some chats and I see what people are doing, and I don't talk because I like to just sit there and what's looking at what the world has become. And then you get a broker, right? We're gonna say a broker, right? Now, inside of the HFT system is a fast liquidity provider also. Now, the broker, and then you get the exchange. We're gonna call this the exchange. This is where the prices come from, right? Now, the difference between when the price gets to the exchange, to the HFT liquidity provider. So in the HFT system, you add a fast liquidity provider, which gets the prices before the broker that you use does. So this system over here will place a sell position as soon as they get the price. By the time the broker gets the price, then this system had already opened the price and it will close it as soon as it is in profits, right? So that basically means that while the broker is asleep, they get the prices and they close it, right? Quick, fast. So a lot of prop firms, they allow the use of HFT, right? And then what they do after that is basically they don't allow it on live accounts, which is why you get a different server if you go on a live account as opposed to being on a demo account. Then I hope that now makes sense to you. EA is a basic indicator that was coded, or it's an indicator that was coded to say that if the EMAs does this, so you use it on MT4. The HFT system, you don't use it on MT4. It's a separate system that you use. It's not a file. I know a lot of people out there got EAs that they say can pass FTMO challenges. Good luck. I've never endorsed EAs. An HFT system is not an EA. It's not the same. It doesn't do the same things there as well. Now, let's clear this. The next thing we're going to talk about is there's two rules, right? The first thing is we're going to talk about the consistency rule. Now, for those of you that don't know this, a lot of prop firms, if anybody asks you to pass the account on behalf of them, right? And also to the people, I see a lot of people are with my Forex funds and with FTMO. That's good, well done. You guys have taken the liberty to go through those steps there as well. But this doesn't apply to you guys because you don't have these kind of rules. So if you had someone pass your account for you using an HFT system, and if the broker does allow the use of the HFT system, now this is where the whole confusing part comes in, right? When a broker, always check out for a broker, a prop firm that allows to use that allow you to pass using an HFT system, which is a system that you will get away, that you can win at the end of the day as well. There are two main rules when it comes to trading. Some prop firms talk about news, some others don't. Some say you can't hold trades over the weekend, and some say it's okay. I mean, imagine you've waited for a position to be held. You held the position all week and then you have to close it just before the weekend because the broker says we don't allow it. Boom. Now, while the USD JPY is taking a dump on the 1 minute time frame, let's do this. Yeah, there you go. So now it doesn't look so bad. So now you can actually see why the market is taking a slight dip, but we are still above resistance, so we still have that clearance to the upside. But in any case, I'm not here to talk about market breakdowns. So I don't normally trade on a Monday. So we've got something called a consistency rule, and you got the 50% rule. Now, a lot of people are confused with it, and every problem that you ask, can you please explain to me how the consistency rule works? They normally tell you, oh no, we can't. There was this other guy, he's a sheep or a dog. He was going to do a video on this, and we're still waiting, but obviously be in contradiction with the business that they are running, to make this video, because then you'd be educated on how to surpass the system and how to dodge the system so that they don't foul you for it. Well, today I'll tell you how you can dodge the consistency rule, and there's nothing they can do to you about this because you doing what they ask you to do, right? So the consistency rule basically means that you have to be consistent in the lot sizes that you use. So you know it as well as I know it. It is impossible to do that, and I'll give you an example over here, right? If you use a position size calculator, you use a $10,000 funded account. If just for an example, your risk appetite is 1% per trade. In fact, let's go 0.5 because it just makes more sense, unless you want to become a millionaire overnight. And your stop loss for one trade, let's say you're trading gold. You say, I want to do 30. No, not gold, because I don't like gold. Let's say you're trading, yeah, we're gonna have to get gold also, but let's assume you're trading not the Nasdaq, the Euro USD, and your stop loss needs to be 15 pips, right? Now you say calculate. Now they tell you that if the stop loss is going to be 15 pips, your minimum or the recommended lot size for you to risk 0.5% of your account, which is $50, you have to take a recommended lot size of 0.33%. Let's assume all of a sudden that group number 2 is not a swing group. This is now SMC group, smart money concept. Those guys trade with stop losses that are like a few pips. Now that guy says sell euro USD 3 pips stop loss. Now you're going with 1.66 stop lot size. Now you got a 0.33, and now all of a sudden you're there. Next thing you know, group number 45 says, oh, you need to buy euro USD risk 0. But we're gonna go with a 1-to-1 risk reward. Now the stop loss is 25 pips. Now you are left with a 0.20 lot size. Basically what the model of the story is, you will be inconsistent with the lot sizes because you will be all over the place, right? Maybe you follow some other people in the way they trade, maybe, and if you think that's bad, now you still have to come in with gold, which is a precious metal, which is calculated at a higher value than a currency pair. And if you think that's bad, you still have the Nasdaq, and you got the Dow Jones and the S&P 500 to consider, including the US oil, which is a commodity, and they're all priced higher. With those guys, you can't go in there with 0.20. No, you have to go like, now that means you are completely skewed out. Now, the good thing is that with certain prop firms that allows the use of HFT, after 3 months, okay, the rule goes away. Okay, so after 3 months the rule will go away. Now only one prop firm that I know of that allows this, because I use them, I've been with them, I still have my live account since I opened it with them, which is Next Step. Right, after 3 months the 50% rule goes away, and the consistency rule goes away as well. Now you're probably sitting there wondering, I understand what you're saying, but how do I overcome it? Well, no worries. So what you basically do is, depending on your account size, right, you know that you are time bound when it comes to passing the accounts. That is why you use an HFT system, because you don't need that much time. You pass phase 1, you pass phase 2, you're done. Now you've got a live account. There's no time associated to how much profit you have to make, but you know you need to make at least $50, and the deal takes $55. Well, I don't know how that works, but let's assume that is the case. Now, if you have nothing chasing you, not if, but you have nothing chasing you when you're on the live account, right? That means there's no need for you to go and calculate lot sizes and all of that stuff. You can do it once your 3 months are done, and you are now, depending on which prop firm you're with, make sure to check in with your prop firm if the rule does go away at some point. If it doesn't, then you have to stick to what I'm about to tell you now, right? This is not financial advice. This is just the way I trade, you know, within the 3 month period, because otherwise you're not going to make any money, nothing. Next market, there is no way they're going to pay you. They're going to come with all of these stuff to try and dodge you to pay you, right? Level Up Society, I'm waiting 3 months now for my payout. It's been so long I actually forgot about it, and I can show you guys the emails. I'm not even going to waste my time with that prop firm any longer. I'm not trading that account any longer. If you want to take my advice, there's a guy who emailed me now, asked me if I can pass the account. If you're watching this video, don't waste your time with Level Up, my friend. You know, just leave it. Any case, now the next thing I do want to talk about is the consistency rule, right? What you do want to do is that you always want to go and trade a 10% lot of your overall balance, right? What that basically means is that, okay, you want to choose a lot size that is about 10% or about 5% of the account. So let's say we're gonna go with 15k. We got 25k. I haven't bought a funded account in a long time, so I'm just forgetting about these things. 100k, you got a 200k. Now don't go, for those of you that has been trading your account, we got 5k there for the people who's looking to buy a Mini Cooper. So don't go and apply this now. You have to wait now, because you probably already did the whole 1%. What you want to do is, because it is a live account, you always want to go choose a lot size that is significant and that is almost the average. So for me, it's always that 10 to 5%, right? 10% of a 5k account is about for me it would be 0.0 sorry, so for me I would go 0.10, and I will be consistent with the 0.10. I will not include indices, metals, or commodities. I will just trade FX pairs, right? A 0.10, if you trade consistently, you make 2% or 3%, you'll see some good profits in there. With this one over here, I'll probably do 0.15 to about 0.20. And remember, you have to use it, you have to choose a lot size. I'm just going to leave it on 0.20. You have to use a lot size that you're going to use over and over again. You cannot run the lot size. You cannot go 0.15, then the market goes against you, then you place another 0.15 at the top. No, you have to trade it one at a time. If you want to place a new one, close the old one. Otherwise, it's going to count as a 0.30. This guy, I'll tell you to go 0.25. This one, 0.35 up to 0.50 is okay. In fact, yeah. And then, yeah, I'd probably go one lot size, and yeah, I'd go 1.5 lot, and I will trade it. I'll just do one lot, and I will say 1.5 lot, and I'll trade that consistently. I can almost guarantee you that this lot size that I've just given you to trade associated with your account on a live account won't even hit 1% of your balance when the stop loss hits, because it's way below the threshold, just to give an indication. So let's assume that you are trading with a, let's just say we said, let's go into the 10k account over here. We will go with this one. We will go 0.05. This one, we're going to go 0.10. Now, a lot of you are probably sitting there, go like, yeah, but I won't be able to make a lot of money with this method. It's going to take me a while. Trust me, with a 0.35 on average, you'll probably make about, $300-400 per trade. So you probably you'll probably make about 500-600 rand a trade, and you can't argue with me that's a lot of money. There you'll probably make about 1,000 to 1,500 a trade. There you're looking at about 2,500. Here you're looking at 3,000, somewhere around there. Here you're probably going for that 4,000, 5,000. There, the sky's the limit as you go up. Remember, the idea is to be consistent, so you can start making some money. Like, even if you withdraw 500-600 rand, it will boost your morale in order to want to withdraw again, right? I withdraw at least 2 times per week. Okay, need you to get there as well. Don't go buy here, buy there, buy this, buy that, right? So this is what you want to follow, and you have to use the same lot size. Try and stay away from NASDAQ. Try and stay away from gold. Those things you can always come back to visit as soon as your 3 months are over, provided that you are the prop firm does allow it. Next up, we're going to talk about the 50% rule here as well. Now, the 50% rule is quite easy to understand, right? But it's also a way in which they barricade you to not hold trades for too long. If you started with a 10k account, you made $5,000 in profit, okay, on in one trade. Basically, what that means is, sorry,
I'm not sure I understand.
Oh my, not now, please. If you made, if you got a 10k account, you made 5,000 profit, and the account sitting in now, the account is now sitting on 15,000, right? You will be in breach of what they call the 50% rule. Why do I say that? Because one trade cannot be 50% equivalent to 50% of the amount that you would like to withdraw. So in a case like this, if you press withdraw here, right? If you press withdraw here, then you are not going to get it. Why? Because the profit that you made is $5,000 and you want to withdraw $5,000, so that means you cannot get it. Let's assume you make you make 20,000, right? The account is on 10,000. but now you made a 10,000 profit. I'm gonna move this like this: 5,000 profit, right? Now we're gonna say equal to 15,000 equals no withdrawal. Okay, there's no withdrawal there because the profit is 100%. The profit that you made in one trade is 100% equal to the amount that you want to withdraw. Now let's say you made 10,000 profit. Let's go 10,000 profit, and you now the account is on 20,000. Sorry, 20,000 again. No withdrawal. The only way that you are going to withdraw, because now 10,000 is also 100% of the profit. But let's assume you start with a $10,000 funded account. One trade is $1,000. The next trade is maybe $2,000. The next trade is $1,500, and then there is another trade. Let's say, let's just leave it there. Now you got 1,000, 2,000, 3,000. You got 4,500. Right now the profit is equal to 4,500. Right, that's the profit. The easiest way to understand that, you just divide this number by 2. That will give you a total of 2,250. All you have to do is no trades in your no profits, no trades that you've closed in profit should be more than 2,250. Is this 2,250? No. Is that 2,250? No. Is that 2,050? No. Good. Now you can click the withdrawal button. When the withdrawal is gonna come, I can't tell you that. You must just wait, like I did and still is. Any case, that guys, that is the simplest way. This consistency rule is gonna complicate your life. And that is the easiest way to understand how to work through the consistency rule. Until you've gone past the 3 months, then you can trade the account with a 1% risk, any lot size you want to. Then you can go crazy. But for now, let's be disciplined. And if you enjoyed the video, please do consider smashing this thumbs up button. Thank you for your time. And as always, cheers for years.